Good evening, folks. Welcome to the 274th webinar of TiE Mumbai since 18th March 2020. This year has been a full of it. And in a sense, I'm very glad to announce that this is going to be the last webinar of the year for us. So it's been a great journey, 274 webinars. We've had some of the fantastic speakers. And to top it all, today we have bombshell of speakers who have come again. And we're going to continue this again starting first week of Jan. But today we're looking at three specific sectors: health tech, edutech, and e-commerce. And I welcome you all to this Founders Talk series with our partners, Entity NetMagic. They are our partners for scaling and also our partners for cloud. And the topic is pretty much predominantly going to be around evolving businesses for scaling startups. I have an illustrious panel today with me. We have got three founders, an investor, and a technologist. I'll be kind of introducing them later. But first, let's go to our very own Sharad Sandhi. He is the leader designate of Entity Limited in India. Congratulations, Sharad. Apparently, last time when we were doing this series, just before the series, the announcement was made that he's going to be taking all of Indian entities under his leadership. So congrats on that, Sharad. And first, let's look at a few messages from the leader. Over to Sharad's message.
Good evening, dear friends. Welcome to the second edition of Tech Talks Among Founders, Evolving Businesses and Necessary Technology for Hyperscaling Startups. This time, we are primarily focusing on three sectors: e-commerce, edutech, and healthcare. And thank you for joining this digital series, brought to you in association with TiE Mumbai. Technology and business leaders have been compelled to rethink processes, strategies, and business continuity plans to be able to react rather than react to uncertainties and adversities. Every adversity carries within itself the seed of an equal or greater benefit, and this pandemic is no different. There have been several learning for businesses adapting and innovating to not just survive, but build momentum that will help them thrive as the economy bounces back. The pandemic has also served as a wake-up call to enterprises to embrace digital in its entirety, giving rise to the new digital economy. My association with TiE goes back many years, and it has been a continued privilege for me and Entity NetMagic to engage with founders and technology leaders who are at the cutting edge of innovation and hold the power to be true change makers, leading us through this crisis. Innovation remains core to Entity Group's DNA, investing $3.6 billion each year, funding R&D globally with over 2,500 research engineers and 16,000 patents across its research-focused organizations, thereby making it as one of the top 100 global innovators. In addition, there's also the US-based $500 million Entity Venture Capital Fund set up by my dear friend Vad Goel to help rapidly scale startups from concept to global relevance. Last year, we brought the Entity Startup Challenge to India, an initiative where incidentally we had also partnered with TiE. India commands a very key role in Entity's global strategy, and this inspires us to pursue constant innovation and drive greater value for our customers as we enable critical business outcomes. In India too, we have 3 R&D centers and have around 100 dedicated R&D professionals who are focused on cutting-edge technologies to bring innovations in our core service offerings to our customers. I believe this current phase is destined to go down in history as the great rush for digital, not unlike the gold rush of old. We've all observed how organizations have accelerated their digital adoption plans, going many years ahead in the span of a few months. A critical aspect of this transformation is building an always-on, resilient, agile, and secure infrastructure, especially during these trying times. At Entity in India, our engagement with our customers is changing in extraordinary ways during this crisis. As a technology partner, we are going beyond the established ways of customer engagement to help them meet the dramatic change in their employees' and customers' behaviors and preferred interactions. It's now about serving rather than selling. a reflection of the radical shift in customer demand that we've seen in the last few any organization, especially in initiatives like digital, cloud, etc. Entity has seen phenomenal growth in India, and as a response, we have committed to significant investments in India and will continue to do so in the coming days. With this session today, I hope you are able to discover insights and strategies that will help you refine and evolve your businesses, harnessing the advantages offered by technology. Lastly, let me add here, we harbor a very close relationship with the startup community over the last couple of decades, and it would be our keen endeavor to nurture and cement that bonding further with the digital native companies in the ecosystem. Thank you once again and wish this platform a grand success and let the conversations begin. Thank you.
Thank you, Sharad. That was a great advice to all the startups. Also, folks, just to set a little context more on Entity Net Magic, they have actually come across an offer to help startups scale up, and which is what our partnership with Entity is all about. And the entire team of Entity, uh, starting with Karan, Ananya, Prasanjit, Naitik, over the past 2.5 months have been helping startups. And they've kind of come in association with TiE to mentor you all, to talk to you all, to help you grow, scale up, whatever your problems. We're going to be starting a series of mentoring session post this session. And so please do write to us, and experts from Entity Net Magic are going to be at your doorstep trying to help you all scale up. So that is what this whole series is about. And now let me introduce our 5 illustrious speakers today. We've got 3 excellent founders. All of you in the TiE community know our very own champ Alreja. He is the Chief Business Officer and co-founder of Goki. TiE and Champ and Goki go a long way, more than 15 years. We have Rajneesh Bhandari, who is the founder of NeuroEquilibrium. Rajneesh was the president of TiE Rajasthan. Uh, he has a very cool startup. I'll allow him to introduce himself and the startup. And again, our long-term charter member, Shantanu Rooj, founder and CEO of SchoolGuru Eduserve Private Limited. I'm sure Shantanu has seen, seismic growth in the last 10 months. Uh, for a lot of us, EduTech was something which was going nowhere until March hit us. So Shantanu will talk to us about it. And then we have an interesting investor, Aditya from 8 Road Ventures. And Aditya has close to about 45 portfolio companies under his company. And I think I'll leave Aditya to talk about how he does investing and what 8 Road's philosophy is. But he's one of the coolest investors that I've ever met personally, spoken to. He comes off unlike any investor. In fact, he is sitting with a checkbook over there. All you guys have to do is pitch it to him right now, and he's just writing and tearing off the check leaves as we talk. And then, of course, our very own in-house technology expert, Karan Kriplani. Karan has been the champion for scale up on cloud. He's the VP and product management. He's the VP product management for Entity Net Magic, and anything to do with tech. Karan is the cool dude. You can talk to him, and he will sort you guys out. And in fact, a lot of startups post our last session have been talking to Karan and his team, and they've been helping sort things out. So that's with the introduction of our 5 cool speakers today. I'm going to be starting the panel discussion by first bringing on the 3 entrepreneurs. Um, so if I could get into focus, Champ, Rajneesh, and Shantanu, I'm going to start off with simple questions to you folks and help our audience, predominantly made up of early stage and growth stage entrepreneurs, founders, and companies. So, folks, your first question is very simple. How has the last 10 months been for you all? And please do start off by giving us a quick 2-minute introduction about yourselves, and then how has the last 10 months been for you all, especially for your business. And then I'll come to the next part of the question. So if I could start off, Champ, over to you.
So thank you, Naveen. What's interesting about TiE is I just want to give you this bit of story before I start. Is Vishal and me met at TiE, and the rest, it all began at TiE for me. He was my mentor, and people pushed me to take money from him when I was running a company. And I said, I don't want to take money from him, just advice. And Goki happened.
Excellent.
So
Champ, go on. Are we losing Champ?
Net issue, I think.
I guess so.
We can take another speaker.
Sure. So, Rajneesh, if you can go on with the same question, we'll get Champ back again. How has the last 10 months been for you, Rajneesh? And a quick intro about yourself.
Yeah. So thanks, Naveen, TiE Mumbai, and NTT NetMagic for inviting me. My company, NeuroEquilibrium, is a remote diagnostic platform for super specialty healthcare, leveraging machine learning and computer vision. We have our clinics in more than 125 hospitals across India and are now expanding globally with the aim to set up more than 1,000 clinics in the next 2 years. So this is a brief introduction. In terms of COVID, I think NeuroEquilibrium is a futuristic healthcare platform which has been built for an online connected world. So thus COVID has only accelerated the adoption of our platform and the underlying technologies. So, it has been a positive in that sense for our company and the technologies that are there built into the platform. Thank you.
So, Rajneesh, for the sake of mere mortals like us, if you can explain what your company does, that'll be better. It was a little too hi-fi for us. So, explain a part on balance disorders and what you do with AR/VR, and that will give us a context.
Okay, so the first domain that we have built is for vertigo and balance disorders, which affects 15% of the population. So we have a asset-light model, clinic revenue share model, where we set up our clinics, and then data flows at the back end. And at the back end, we use machine learning, computer vision, we use virtual reality for rehabilitation, we use precision medicine and targeted rehabilitation protocols. So we are using a lot of technologies to basically solve the problem around these 15% of the population who suffer these symptoms of unsteadiness, imbalance, frequent falls, dizziness, and others. And I think as we discussed in the next section, I think we'll talk about how we have built what is a scalable model where we take care of both the how the patients will come in, and also at the back end, how we build a scalable model such that we don't need a huge battery of number of doctors and can use the technology to scale up at the back end. So I think I hope that explains in a more simple manner.
Thanks, fantastic. Shantanu, over to you.
Yeah, so Naveen, two things. My association with TiE is close to about 2 decades now, almost. And to every single entrepreneur that I've met, I've told them that this is one of the finest universities that you should go to. Right? This may not be just a association. I think this is something that there's a humongous amount of learning that happens at TiE, and I think that's the opportunity. For us, I run SchoolGuru, which is an online program management company. To define that better, we help Indian universities launch, run, and manage online degree programs. That's one part. And second part of our services where we help them make their students more employable. So that's the business that I into. So we run close to about 40 universities in this country. Most of them are large public universities. And we help them run all of their online learning initiatives. So as you're aware, I mean, COVID-19 has been the mother of the largest controlled randomized trials available for the industry. It has brought forward online learning by almost a decade in the last about few quarters time. It has brought legitimacy to online learning in this country, and it also brought out a policy window. Everything that was stuck in this country for the last about half a decade, actually those policy window opened up and things started changing for the better over the last 2 quarters. So like most edtech companies, and that happened to us as well, has seen a rapid growth in the last about 2 quarters time, and also have seen a large pathway of growth coming up in the future for us. And I think that's what we are witnessing for our industry at the moment.
So do you think future physical schools and colleges are here to stay, or are we all going to only look at online universities and education?
So I'm sure it's a no-brainer, Naveen, that online education can't replace physical classrooms, but then obviously it will have an important role to play, right? So the problem was that all of this while, all of us knew that EdTech could have transformed education, but most of the time it has actually disappointed because just PowerPoint presentations or textual material converted e-learning didn't work for all of us. But now things have started changing. People, customer experience have started improving. And with a lot of service providers coming up with the innovative technologies, platforms, and services, I think it started changing. And I think the future belongs to something which is more blended, which is more online, which is always on, which is gamified, crowdsourced, modular, multimodal, multilingual. So we'll see a different life form of education in the future. That's what I think.
Thanks, Shantanu. Do we have Champ with us, or Champ, are you there? I don't think so.
Yeah, I'm back. Yeah, I was
Sorry.
couldn't unmute myself.
So Champ,
Yeah, so
how
you
has
lost me.
11 months been for you guys?
So I think for healthcare, it was exactly like I don't know if you know what SARS did to Alibaba, right? So SARS was like the game changer for Alibaba because people started shopping online instantly, and Chinese adapt so quickly to things, and India being such a young population itself, I never saw people like I live in Bandra, and I never saw people walking. Like every morning I go out, the streets are just crowded. People are running, they're walking, they're cycling. Everyone's picked up something healthy, and it's just so amazing to see that. So, me being in healthcare, I think it's been a game changer. I mean, not think it has been a game changer for us. People, what we're in the business of guiding you and motivating you to stay on top of health game through a super app and through data. And we've seen a huge change. We've seen a huge lifestyle change for the better of the people. And yeah, we just absolutely hope that it continues, and it becomes more permanent. I mean, the biggest challenge with fitness was 1st January, everybody wants to be fit, but by the 21st of January, they all kind of get unfit. And, New Year resolutions are broken. And I think this year, let's see what happens in 21. It looks more promising that resolutions are going to stick.
True, very true. And Champ, you basically take care of the e-commerce side of your business, right? And how has that been in terms of business?
So I've had over a decade of experience in e-com. Happy to answer all the questions that people have so many questions on e-com. When I go cycling and I go running, with my mates, they also keep asking me questions on e-com, and I'm happy to answer all of them for you today. And I hope I can accelerate all that. So we did start an e-com store within the Goki app about 2.5 years ago.
Okay.
And, we've been a very good sales channel for a lot of the brands that we have on the Goki store. We sell most of the brands that Nature's Basket or, Food Hall kind of sell, which are indigenous, new, healthy food brands only.
Mm-hmm.
And, major sales channel. I'm actually very proud of that. I'm happy that our users experience these kind of products. They're healthy. So yeah, I mean, getting there so quickly has been an amazing journey for us.
So has the
And
COVID
especially
so sorry, I was asking, has the COVID accelerated?
COVID had its own challenges.
Okay.
Right, with ecom, COVID had some crazy challenges because logistics was shut, and it was so fluid. Every week, every 2 weeks was so fluid. But luckily, being in healthcare and not just general ecom, we were not shut for a single day. Our warehouse operated all through, including Sundays. And that was the advantage of being in the healthcare sector with ecom mixed with it.
Yeah, I think you're one of those rare examples. Sorry, I was saying you're one of those rare examples where verticalized e-commerce has been
no, it also played a very pivotal role.
Hello, I think we're back again. So folks, now I'm just going to slightly change the direction of the questions here. And again, back to the three of you. If you can don your, industry sector hats and tell us what your industry has been through in the last 10 months. and how is it primed for the next, say, 18 months? So starting with you, Shantanu, I think EduTech is, I think, one of the most funded right now. So how has it been the last 10 months for your industry? And you've kind of given us the answer for that. But what do you see the next 18 months? What are the evolving models? How are you all going to scale up?
Yeah. I belong to the higher ed segment of EduTech, Naveen. So two parts, right? So this is clearly demarcated as K-12 and higher ed. So I belong to the higher ed segment of EduTech. So let me focus that part of it.
Sure.
So you see, we're clearly seeing lots of trends which are coming up in this particular space, Naveen. One is online degrees in this country is becoming legal now. Right, so it's a lot of people may not know, but this is a true fact that we as Indians could have enrolled ourselves in all of these international universities, and the government of India had no problems. But then none of these Indian universities were actually allowed to launch their own degree programs. I mean, this sort of an apartheid actually existed in this country for quite some time, and COVID-19 brought and John Kingdom, one of this political enthusiasts, kept saying that when the opportunity, the problem, and the timing comes together, that opens up a great policy window for massive things to happen. And that actually happened now when in May 2020, when Prime Minister Nirmala Sitharaman, all of these guys came and said that 100 universities in this country will launch online degrees. So that's something that started happening, and that started legitimizing a lot of online learning, right? So all of this while online and distance education was always at the periphery of education, right? So the prestige value, the learning outcome, all of these were, so that it was never mainstream. So online education became mainstream now. That's one part. Second thing that we are also seeing is because of the need for continuous upskilling and reskilling, which is needed today, we are also seeing the emergence of the employed learner in this particular space. So Indian higher education, all of this while, for example, almost close to over 40 million learners that we see in the higher education space, most of these are traditional learners, people who have passed their class 12th and gone to graduation, or completed graduation, go to post-graduation, right? So almost about only 10% of them are people who are working and still learning. In the next 2 years' time, 24 months' time, one of the research reports that we published some time back says that the number of employed learners of this country, we have close to about 50 crore people who are employed in different corporates, both in the formal and the informal sector. Most of these people will need to be reskilled or upskilling because of all of this stuff that is happening in the world of work, right? Which means that the entire demographics of Indian learning is going to change, which will require many different service providers. It will require people who can provide content, people who can provide platforms, people who can provide degrees, people who can provide modularity, people who do blockchain and do credentialing, people who do online assessments, people who do skilling, employability, all of these things. I think the battleground is actually improving, and there's enough scope for lots of service providers who are going to play a game. Second trend that we're also emerging, Naveen, is people's expectation out of these edtech platforms has started changing, right? People are willing to pay a premium for personalized, customized service because we're all experienced with the consumerism that e-commerce platforms provide today. And people actually have started demanding the similar services from their edtech platforms. That is changing, the customer experience is changing there. I think the entire industry is getting aligned to delivering outcome and output. Right. So, and people who do not understand that possibly will find it difficult to survive. And I think all of us, and COVID has taught us many lessons, right? So we have realized that one of the important lessons that it has taught us is resilience is as important as performance. Right. So pre-COVID, most of us believed that performance is the only thing, growth was the only thing which mattered. But then COVID taught us all, right? So it also taught us lessons which I'm sure Aditya will agree to. It said that our customers pay our salaries, shareholders don't. So we need to understand, we need to be careful about revenues, we need to be careful about cash flows, we need to ensure that we treat companies like rivers, not like ponds or oceans, which has got unlimited amount of capital. So these are the type of lessons that it taught us. So we are seeing the emergence of lots of players in which are specialized in particular segments in the edtech space. We are also seeing a lot of consolidation which has started happening in this particular space, right? So there's abundance of capital for worthy companies today available. We are seeing strategic acquisitions which have started happening now. So we started seeing this sector streamlining, sector consolidating, and reaching a state where possibly we'll start delivering large amount of value to consumers.
So it's a good time to be an entrepreneur in EdTech at the moment.
I think anything which is digital today, it's a good time in case really have a problem to solve and you are being, you know how to beat your competition, right? So if I keep telling entrepreneurs and fellow entrepreneurs that as entrepreneurs, we build two type of companies. One is a baby and the second is a dwarf. When they're both small, they all both look the same. They eat the same amount of food, but the difference is in their DNA. Right? So the baby is going to grow, where the dwarf is going to remain where it is. So I think as entrepreneurs, this is a good time to in case you can identify a good problem to solve, and you can build a team, you can build your strategy. These are exciting times there.
Thanks, Shantanu. That was really wonderful encapsulation of your sector. Rajneesh, what is there for us in health tech devices?
Yeah, so COVID has accelerated the change from digitization to virtualization in every domain. So in healthcare, we see three major trends, after COVID. So the first is what Shantanu was talking about, change of regulatory framework. I think this is something which has happened globally. So in India, online education did not have legitimacy. So similarly, telemedicine and telehealth, these were gray areas. And there was no framework, for a long time. So on 25th March, NITI Aayog came up with telemedicine and telehealth guidelines, which are amongst the most futuristic globally. In USA also similarly, telehealth was not allowed from one state to another. A doctor in one state could not talk to a patient in another state. All that changed overnight. So I think regulatory framework in most industries have gone for a dramatic improvement. The second is we are seeing emergence of telehealth and telemedicine platforms like Practo, 1MG, Apollo 24/7, etc. Now, as per Red Sea report, 30% of all OPD will shift online by 2025, with about 50 million households doing virtual consult, and most of this on subscription model. So this is a tectonic shift, which most medium-sized hospitals are not even trying, aware of or understanding the whole shift that is happening. I think the third, which is very important, is that there is accelerated adoption of new technologies, which will be the game changers for healthcare in the next decade. 3D printing, machine learning, computational models, computer vision, precision medicine, virtual reality, AR, wearables, digital therapeutics, electroceuticals. And incidentally, we leverage all these technologies on our platform to treat our patients on a long-term basis. So to summarize, I want to say that this shift from to virtual has been forced by COVID, but this is a permanent change of customer behavior because it will add value beyond social distancing and reducing commute. So, tomorrow people will go for an OPD consult online, not because they don't want to step out of the house, but because it will be much better than actually going and visiting a doctor. And tomorrow, I mean 2021, not 10 years from now. So I think that is the fundamental shift that every domain, and Shantanu was talking about education. So online courses will be much better than physical courses, and that is the value add that virtualization will bring. And that is why it will be a permanent change. Thank you.
True. So the future is here. Champ, with respect to e-commerce, how do you see things panning out?
So similar to the other industries, right? E-commerce is, I think, the biggest challenge used to be adaptation. There's so many people in the age groups of even the 30s and 20s who would just like going out shopping, and they would go to buy something and come home with something else. And it was just an experience, and it was kind of never ending. But the adaptation and the way people have adapted to e-commerce, they've had no choice. And that's just going to spread a lot more, because we're seeing a huge jump on our store. Like, we're seeing over 120% growth month on month. And I think that is a serious number. It just shows that, customers now, they also want, like, there's also a big trend in the kind of products that they pick. Health products, fitness products, is so much more than just plain lifestyle products. Even things that people buy for the house, it has changed. And the best thing with e-commerce is you can actually educate the person. So the big challenge was earlier, it was a storekeeper who would get the education from the brand and then pass it on to the customer. And there was a chain, it was a very weak link that would just break. But with e-commerce, now people are so vested into it that they go and they read the reviews, they see the photos, they check other people's experiences, and then the buying decisions are much better, and the brand stickiness becomes a lot better because you kind of get habituated. And this has changed from the earlier thought. So the trend report as of last year actually said that millennials and the next gen are actually losing their stickiness to brands and their loyalty to brands, and it's just going to who gives them a better experience. But I think that is changing again. If you've tried a product from a particular brand and you like it, you will try the other products, and we are seeing that change, honestly.
Excellent. And how do you see the next 18 months?
I think it's just going to be about growth, honestly. Especially I can say we are fortunate being in healthcare, and we're not trying to sell products to customers, but we're trying to actually serve them and help them actually improve their lives and see how they work also. And because we are in the business of trying to guide you and motivate you and get you the right product. So our e-commerce model is a little different than the other guys because we are only in the app, right? And it's a healthcare app. So it's a different focus, and I see a huge uptrend month on month, uh, as and when for the next 18 months.
Perfect. So that looks like all of them are going to grow at 10x easily. So folks,
Yes.
on to the next segment. I'm going to be inviting the investor in the house, Aditya Systla, who is the principal at 8 Road Venture Partners. So Aditya, if you could start off by giving us a quick introduction about yourself and an overview of what the 10 months for investors has been. We've always looked at things from founders and startups point of view, but I'm sure you guys have also faced enough of pressures and tensions. How have you managed the last 8 to 10 months? What has happened in terms of your philosophies over the last 8 to 10 months? So if you could give us a overview, that would be helpful.
Sure, Naveen. Thanks so much for having me as part of the forum. It's great being here. So as a quick background, 8 Roads is the proprietary venture capital arm backed by Fidelity. We have more than $7 billion globally across 350 plus investments, across Asia, Europe, and the US. In India, we've been investing for more than 12 years and deployed close to $900 million across around 45 companies.
Mm-hmm.
For us, core sectors include consumer, technology, financial services, healthcare. We're reasonably flexible in terms of stage and can come in fairly early, and we invest all the way up to Series C, Series D. Personal background, I've been doing investing for a little more than a decade. Been with 8 Roads for a better part of 6 years, and look at sectors spanning EdTech, consumer, B2B, SaaS, logistics, amongst others. So Naveen, I think coming to your specific question, I think the last 9 months have been a real roller coaster, right? I think I think where we are today, at the highest level, in terms of the funding ecosystem, if you're building a product or a service which has found a strong product market fit, demonstrating good metrics, playing in a large industry, growing steadily, etc. I believe the funding environment today is quite robust, despite COVID. Several funds, including us, have been, investing for more than a decade in the country. And over the last 9 months, it was really heartening to see, the funds get together, support the ecosystem, working with the portfolio companies to ride out, I would say tough, potentially a tough dislocation that COVID was sort of threatening to be, right? So initially, a lot of the funds were sort of inward focused, waiting to see how things will unfold in terms of impact, recovery, how soon, how many quarters will it take, etc. But driven by a combination of sort of macro liquidity factors, and I would say sectors like, the 3 core sectors that we are talking about today, EdTech, health tech, SaaS, gaming, streaming, a bunch of others, right? Deal activity has certainly, returned pretty aggressively. I would say post the May, June slowdown, most of the funds have continued to sort of stay, reasonably active. But I think the most important learning, at least from me personally, has been, I manage a bunch of companies at Eight Roads, and when companies go through a tough time, pre-pandemic, companies were usually playing offense, right? Which is what a lot of companies do during good times when the funding environment is strong. But I think pandemic and COVID sort of forced the hand for a lot of the companies, and they were sort of they were forced to play defense. And for the first time, you had not the first time, but companies were sort of modeling out real downside note scenarios, right? How long, how long can I survive? They were running multiple stress test models at the customer level, at the company level, customer level. I've seen companies really developing some very interesting warning metrics around, if customers are churning, why are they churning? Financial modeling around, what if you grow instead of 70% next year, 30%, 20%, 10%, what happens to your runway? What happens to survival? And I think all this really meant companies really, I would say, matured. And for the first time, went through an event like this. But as I said earlier, I think capital continues to be available. However, the questions investors are asking are very much about growth, market share, competitive differentiation, as much as they are about today resilience, survival, runway, unit economics, and of course, how relevant you are in the post-COVID sort of paradigm, right? We've certainly not come out of it, by any stretch, and one must caution against obviously over exuberance here. But it'll be important to sort of take the spirit of the learnings so far, and whether it is smart allocation of capital, figuring how to scale remotely, doubling down on low cost customer channels for acquisition, extending runway by resourceful measures. I think some of these are really interesting learnings. I think that companies are coming out with. And I think finally, what I'd say is, a trend which has nothing to do with the pandemic is the quality of entrepreneurs in the last few years in the country has seen, right? I think it's been personally incredible. Very resourceful entrepreneurs, some of them second-time entrepreneurs, people who have seen difficult cycles earlier. The skill set of scaling was always, there, but what COVID has taught us is survival, extending runway, thinking about profitability. And so, the implication for some of the larger Series E, Series F startups is they're looking at IPO plans, 3, 4, 5 years ahead of what they would have thought, pre-pandemic, right? So I would say on balance where we are today, it went through a huge roller coaster, but I believe the overall ecosystem has definitely come out for the better, and I'm really excited.
Thanks, Aditya. Aditya, quick question. So now, if you're an early stage startup founder, when is the right time to approach an investor? I mean, have things changed now? Do you need to show scale before they approach you? Or can they still come with a PowerPoint presentation and ideas? What has changed now?
I think as long as you have a product market fit, depending on where you are, obviously there are multiple stages of investment, right? You can either go, at the seed level, the questions asked are very different. But I would say, between a year ago and today, in some sense, the investing world, driven by multiple macro forces, micro forces, has a lot of dry powder, and for interesting segments, interesting verticals, which are going to see massive disruption, either driven by COVID and all the paradigms that COVID has sort of set about in the last 9 months. I would say the product market fit, if you're an entrepreneur, go try to raise money, if you're really confident about the product market fit. I think raising more money early gives you a little more, runway to sort of obviously, scale obviously, and also, fail quickly. So, it gives you extra time. I don't think personally, too much has changed. I think VCs are really open for business, and, interesting ideas are getting funded, even at the PPT stage today, right? So I think it's a very, very healthy ecosystem. Obviously, some of the sectors have been really disrupted, travel, etc. I think some of those really badly impacted sectors, if you're an entrepreneur, you have to just figure out, what is your sort of play to win, but I think some of the up and coming sunrise sectors, I think, I would say there's a bit of over exuberance amongst the VCs to really back some interesting entrepreneurs.
And what are the top 5 sectors would you pick for the next 18 months, Aditya?
Big believer in EdTech. I'm personally, I'm on the board of Topper. Topper is one of our portfolio companies doing really well. SaaS is a big area where Eight Roads over the years has developed a very strong thesis. India for the US, India for Europe, SaaS. Health tech, obviously, a big area of focus for us. Our healthcare portfolio is probably one of the most leading, investment houses in the country. Logistics tech is a big area of focus. Any sort of picks and shovels of e-commerce. So as e-commerce sees a step penetration increase, all the picks and shovels, all the one level below beneficiaries, derivatives of e-commerce, I think is a big area of focus. We've played that theme a couple of times. Both those companies are doing really well. And finally, any tool, any technology that helps in reducing friction, either the sales level or at the marketing level. The sales and marketing stack, especially on the digital front. There are a lot of very interesting tools and technologies that are emerging that are helping both B2C companies and B2B companies really sell more effectively. I think those are super interesting as well. So, multiple interesting themes. As an investor, we're deeply sort of bottoms up thematic. Have the benefit of having global counterparts and who are also seeing multiple trends. So we constantly keep chatting and look at which sectors to invest in.
Thanks. That was a lovely sum up, Aditya. And folks, just a quick announcement. Happy anniversary to Zishan Hayat and his wife. He couldn't make it here today for the panel discussion because today is his anniversary, and he said, "Mujhe maar padega yaar, please chhod de." And that was really what he said. And we said, "Theek hai, we forgive him for not being on the panel today." Okay, folks. Now to the next segment, which is our technologist in-house, Karan Kriplani. Karan, are you there?
Hi, Naveen. I'm here.
So, folks, Karan is a champion for scale on cloud. He's your go-to man for anything to do with cloud and cloud technologies. So Karan, again, same questions to you. See, you get the privilege of looking at the tech dashboard from your point of view. And how has the last 10, 11 months been, especially for growth stage companies, early stage companies? What have you seen scale? And how do you guys come in and help startups scale?
So it's an interesting question, right? And if you listen to Champ and Shantanu and Rajneesh talk about their experiences, and Aditya touched upon this as well, what we're starting to see is that with the digitization of, or the large-scale integration of technology within, almost every startup today has technology integrated very, very deeply into their product offering. Therefore, it's not just the startups that have had to, adapt and improvise in this new normal. It's, large established providers like Entity NetMagic as well, because the pace of technology is changing so quickly that for large providers, you have to be able to, your model to be able to cater to those requirements, to be able to provide those technologies, to be able to incorporate the newest, products and services into your IT landscape. You have to be able to do that in a very, very agile way. Take a simple example, right? Look at containers today. Just going by this panel, everyone who's using technology today is using containers in some way, shape, or form. But within containers itself, you've got options for Docker, you've got Kubernetes, you've got OpenShift, you've got VMware's new offering, the Tanzu Kubernetes Grid, TKG. I'm willing to bet that if you check with Champ or Shantanu or Rajneesh, or if you ask Aditya and you ask him to talk about, his various portfolio companies, everyone's using containers in some way, shape, or form. One of the challenges you have is, do you have the in-house skills to be able to manage this? A very interesting question for startups is, and Aditya touched upon this, is experiment quickly, fail quickly, move on, right? So if you go down a particular technology path, do you have the skills to be able to start that journey? What happens if, early in the journey, you realize this wasn't for me? It doesn't align with what my business requirements are. The outcomes aren't really what I'm looking for. Can I pivot? Can I adapt? Can I move to something else? Can I rip and replace technology quickly? And we're starting to see a lot more of that today. So as a service provider, not just within the startup community, but within mid-market and enterprise customers as well, the rate of change of pace especially when it comes to cloud and cloud-enabled technologies, is crazy. It's massive, right? So as a provider, we need to make sure that we're aligned with or we've adapted to be able to cater to those requirements today.
And how do you see scale now? If there's going to be 10x or 100x or 150x, what is the level of expectation today that a tech strategy should have with respect to its outcomes? How do startup founders look at if they were to sit today and plan for the next 24 months, Karan, what is the expectation?
I think implementing, defining, implementing, and executing a strategy that gives you, a few things in terms of obviously the best ROI, right? Because when you're a startup and you're an early stage company, getting the maximum bang for your buck is critical to most organizations. The other thing is agility, right? Aditya touched upon this. You need to be able to move quickly. You need to be able to adapt quickly. You need to be able to pivot, change direction very, very quickly. So therefore, your technology not just has to give you great ROI, but it also has to allow you to be agile and to be able to pivot very quickly. I think the third thing is flexibility, right? Your IT strategy or your tech strategy has to be able to be flexible. Let's talk about cloud for a moment, right? Everybody in some way, shape, or form is using the cloud today. Recently, RightScale, Flexera, they did a study where they polled about 550 or 600 CIOs across verticals, across segments. And they asked them, what's your cloud strategy going forward? Are you solely on public cloud? Are you solely on private cloud? Or do you have a mix, a hybrid cloud or a multi-cloud strategy? And I think if I remember the figures correctly, 93% of all CIOs and CTOs polled talked about having a multi-cloud or a hybrid cloud strategy because it gave them the best ROI, the best agility, the best flexibility to be able to determine the best execution venues for various workloads, right? I'm sure Champ is running more than one application in his IT landscape, and different applications benefit from having different execution venues. From a cost perspective, from a performance perspective, Rajneesh is in the healthcare space. There's compliance and regulation that you need to abide by over there. Certain applications don't really benefit from or don't adhere to global compliance and regulatory needs, whether it's HIPAA or something else, from being on the public cloud. So therefore, you need single tenant private infrastructure as well. So my advice to early stage startups would be define an IT strategy today that allows you to be flexible, that allows you to be modular, that allows you to rip and replace quickly with the minimal amount of damage and impact to your continued business imperatives.
And so Karan, if I might ask on behalf of all the founders here, would you folks be willing to help startups in kind of
course.
take them
Of
through the
course,
journey?
I think that's part of NetMagic's DNA, having been through the startup phase ourselves, right? I've been with NetMagic for 2 decades, so we've gone through that, and in a lot of ways, we still operate like a startup. Our goals are to be as agile as possible, as nimble as possible, not really get bogged down with red tape, bureaucracy, process. Those are important. Process is definitely important, but we try to not let it bog us down. So we relate, we completely understand. Aminder's going to talk about, what we have. We have an offer for startups today, like a little goodie bag, like you mentioned. But even before that, the approach that NetMagic takes very much is a consultative, mentor, advisor approach. And we try to be as objective as possible. So, if that involves, say, hey, not my product, but a competitor's product might serve you better, we're the first people to, make that admission.
And Karan, a lot of founders, especially from the greater Mumbai Western region, for whom, tech is always a challenge, they've always come to us and told us that, if we could have a CTO who can, build, operate, and transfer himself to the company, that's the best model that anybody could do. So any thoughts on that, Karan?
Well,
starting
it
with first.
raises a larger question. Like, do you need a CTO or do you need a CIO? I think that's the prime first question that you need to ask. And I think people sometimes use those.
Let me just stop you. If you can first of all explain to us the difference between both CTO and a CIO. We are at that. Yeah.
Okay, so this is probably 101, but if you were to really distill it down, is a CIO is predominantly a techno business role, whereas a CIO role is, an even mix of techno and business, right? Whereas a CTO may serve a variety of roles, but usually they're all deeply technical. So depending on the company in question, especially when it comes to early stage startups, sometimes the founders and the CEOs themselves retain that role of a product creator or a developer. So then what they need then is maybe a CIO to align critical IT functions with their business so that the tech startup founders, who've created their company's product sometimes also have a CTO title.
Got it. Thanks for explaining that. So folks, now I'm going to open this up to all of you now. I'm bringing all the 5 panelists together. And here's one question that is kind of, I think, close to everyone's heart. Is today's topic is about scaling up. And I think the first question that is resonating is, how do you basically build an organization culture? How do you define your hiring strategies for getting your scale up right? So I'm going to start off with maybe Aditya, take a shot at it first. And then I'm going to say whoever wants to pitch in, please do. And Karan, of course, from the tech point of view, I would like to ask you, again, one of the challenges that a lot of the Mumbai-based or the Western-based companies have is, how do they choose a right CTO, CIO? So let's come back to that. First, I think, Aditya, your thoughts on organization culture?
Yeah, actually, interestingly, this is one area that we were having a discussion with one of our really rapidly scaling up portfolio company, which has gone from Series A few years ago to now Series E in a matter of, I would say, little over 3 years. Mm-hmm. And the question the entrepreneur was asking us was just around he was having this dilemma between obviously having folks who've been with him right from the beginning, but I think he was sort of he was finding it difficult to and they were all his college batchmates, right? I mean, they sort of young. They started off in mid-20s. Today they're sort of in the early 30s, and I think this constant tussle between getting in talent, at the right stage, versus sort of letting old guard really scale up, and the implication for that. And I think that's a very interesting question. I think there are some examples where, obviously, when I say the old guard, I mean, guys who've been with, the company from Series A, they tend to scale up well. But I think, as a founder, as investors, one needs to sort of be, relatively unemotional about, taking decisions like this, and working with the founding group, and ensuring that, we absolutely have the right people. So in this case, for example, it's getting very operationally intensive, and any break in operations will mean low NPS, poor customer satisfaction, etc. So I think in terms of culture, it's drawing that fine balance between skill sets, culture, stage, and I think just having that openness and being aware of the fact that you got to bring in stage appropriate talent. Otherwise, it's just going to be very difficult to sort of scale. I think that's just overall number one. I think number two, in the age of sort of remote working, I think just getting people in. I think just onboarding people and successfully integrating is very different today than what it was when people joined the Bangalore office, and they had a joining party, and then they had this orientation. So the businesses will have to constantly sort of reinvent themselves, and just the way you orient people, the way you onboard people, the way you train them, the way you sort of take them and integrate them into our organization. I think all these are really important steps. You have to almost treat them like like a problem 101. You're solving each one of them one by one, because in a digital world, how do you ensure that someone's integrated culturally? How do you ensure that from a skill set perspective, he's up to speed? And you have to do all this without pissing off the old guard, the new guard. So I think it's a very interesting dynamic we're in. No easy solutions, answers. It's a bit of trial by fire, but these are really critical because talent, and stage appropriate talent is what really builds companies. And it's very important for even though we are now in some next few quarters for the next few years, we'll all be sort of remote, and we'll be in this hybrid mix of on on-prem and cloud, but essentially it's, you'll have to figure out a way to sort of make this work. Yeah, so I think this is a very important focus area, and I would be personally, I'm a student of HR, so I would love to understand from the founders here how they are navigating this, because I've seen multiple sort of attempts at it.
So, now, I mean, if you allow me, I have a slightly different take on this stuff that Aditya said. I'm sure everybody has a different take. So the question that I keep on asking myself is, America has good roads, right? So does America have good roads because it's a great company, or is it a great company because it has good roads, right? So you have to ask that question yourself. So it's important to figure out do you need an amazing team at the outset to ensure that you make a great company, or you make a great company and then you have a great team, right? So if you define strategy as the art of creating an unfair advantage for yourself, I think creating the right team, creating a very, very strong team sits at the core of that strategy, right? I have been defining entrepreneurship as the art of staying alive long enough to get lucky. And if that's true, then in that case, we actually need to ensure that you have the really rocking team in case you really want to make your startup go all the way, right? So team is at the core, the fundamental of a startup. And I think you need all the time, right? From when you start off the company to when you scale up. You can't compromise on that at all.
Okay, so let me twist the question a little so that I can extract a little more from the founders. So the three founders on this, panel, can you give me some challenging situations that you had to face? And don't worry about the outcome. If you had to fire people or do some drastic things, I think that's a learning for the crowd today. So give us some more pointed kind of things on what you've done with the organization, and
Let's start with something that maybe more simpler put with an experience that we had in the last few months.
Perfect.
So I believe that you always start with the goal, right? You could start from scratch, but you always have to have a goal and say that in the next 3 months, this is my goal. And you hire a team of Avengers who are not like you, who complement your strengths that you need to achieve that goal. I think that goal is the most important thing before you hire. And the second thing, the challenge that we actually faced in the lockdown was we hired a lot of people. And like Aditya said, in a digital environment, things are different. They're not like. So I had one of my colleagues who actually called me. We had hired somebody in the team, and one of my colleagues who's been with the company for about almost 2 years, he calls me up and he's like, this guy's not talking to me like that, and he's just commanding me and doing this and doing that. And my simple question to him in the morning was, how well does he know you? Have you guys spent any time together? At least familiar yourself, with each other first. Let him get to know you, you get to know him, and then see where the relation goes. We're not robots, we're humans, we have emotions, we have backgrounds, we have so many things that come with us. And that was a challenge we faced. We overcame it just by that. And we meet the whole team now. We've scaled up to a very big team, just the store in the lockdown. The entire team was put together in the lockdown, actually. And we had a fair bit of challenges, but as far as everybody's working to that goal, I think, that is exactly how each team member contributes to the other one. Because if you don't have a goal, everybody's just, working like a headless chicken, and, then egos come into place, and there are some, backgrounds come into place. There's so many things that come into place, and everybody has their own opinion over so many things, because there are subjective things like design, there are objective things like money, but, when there's a goal, you've got to give everybody a goal and a target.
Okay. Rajneesh,
So,
yeah. Go ahead.
Naveen, if I can add from what Champ has just said. So I think I believe very strongly that to build scalable organizations, we have to build a culture where we imbibe the exponential mindset in every stakeholder. And by stakeholder, I mean not just employees, but everyone who's working, maybe vendors and others. So having a massive transformative purpose, as Singularity University and others have called it, is one of the most effective strategies to align and galvanize the teams. So our massive transformative purpose is to impact 100 million patients in the next 10 years. And this is there in all kinds of communications to every stakeholder. And it really aligns the team and brings them together because there is a shared vision and a long-term vision.
Okay. So folks, what has happened to things like, you hired before the pandemic and then you suddenly had to pivot and you find, more than 1/3 of your people were redundant because you no more were following that, business model anymore. What have you done in those kind of circumstances?
I would. We did a fair amount of role change.
Okay.
And actually, luckily for us, is the role change that we did. People are actually thrilled to have that role change. I don't know why. I don't know how, but they were thrilled. They were more happy. And luckily, we didn't have to fire anybody. And nobody left either. So.
Okay. And any firing situations among the 3 founders? Have you had to let go?
Actually, Naveen, the stuff that we did, I mean, obviously, as soon as the pandemic struck, as all of us said, that it was a roller coaster ride. There was ups and there were downs, right? So initially, the first thing that happened with the pandemic came up is we are all disillusioned. We did not know where we were going, right? So everybody wanted to shift into a business resilience mode. This entire stuff, and the stuff that we realized that there are certain things that we did physically in the pre-COVID time is something that we're not doing now, right? So there are so many people who work with computers. The computer-facing people are people who still had business continuity, but people who work with their hands and legs have suddenly become redundant. So to start figuring out that what works for you now, right? So we did something dynamic. We said that we need to dismantle our hierarchical organization to a project-based organization. So we changed the hierarchy completely. I mean, we ensured that those departments concept of fixed departments, people doing customer service, people doing sales, or people doing projects, that got dismantled. And we said that we identify important projects, right? And we huddle together people who are interested, who are multi-skilled, and who want to deliver that project, get together into that project, we deliver it. So we identified important projects. When we organized the department to projects, and we figured out that, like Champ, we didn't have to fire anybody. And once that trough went through, and maybe the first quarter of pandemic, we realized that we need more people than we had, right? So I think we all went through changes, and we kept on. So we always had a culture of ensuring that when it comes to team, we follow the culture of ensuring that we call it SIPT, which is right selection, induction, performance management, and training. I think that kept on helping us, right, to have a thorough performance management system. So we are being able to mark people by red, green, amber, and tell people who's doing well, who's not, who's being able to adopt, who's being not. So I think that helped us tide through this entire pandemic stuff.
Okay, good one. And Karan, in terms of how to hire tech folks, how have you seen companies, expand tech folks? And, I think reskilling has been a major issue with tech folks. What are your thoughts?
I mean, it's different depending on, for what positions you're hiring, right? Whether you're hiring at the top or whether you're hiring coders or whether you're hiring, someone who's a specific technology administrator, DBA, for example. But what we're seeing is there's definitely a bit of a shift that's happening in the industry as your traditional ITIL model of management, right? Where here's a tower for Unix, here's a tower for Windows, here's a tower for storage, for network, and you have specialists within all of them. Those skills are now starting to become a little more horizontal as more and more people adopt a DevOps, more cloud native, more agile style of operations. But that's one part of the whole hiring aspect. But the other aspect, of course, is, and this is something that you touched upon earlier, is hiring at a senior level. Do you want a CIO or a CTO as part of your organization? And I think that that's something that's possibly of great importance to early stage company or startups overall tech strategy, getting the top right.
Thanks. So folks, I think I'm going to open up questions from the audience now. So I'm going to be firing at all of you. There are a few pointed questions, and especially for the healthcare folks. There's a question from Rishabh. He's asking, what is the future and future products that you're seeing in the healthcare retail market? If you'd like to take that one, Champ and Rajneesh.
I think healthcare retail today is like SMS was 20 years ago. We're just at the beginning of it all. Sensors, more than sensors, ease of use, battery life, because human factors, that is human interaction with product, um, that is just getting started. We've not even scratched the surface yet.
Got it. So there's a great opportunity for founders out there to go and build tech, or health tech or med devices, according to you.
Absolutely. It's not as expensive as it used to be 10, 15 years ago. It's so cheap to build tech today. It's not funny. And then you have good investors like Aditya who want to sell money to us.
Too much competition.
Yeah, but that's a different story. So you need to find a way to cut through the competition. Find your differentiation, and yeah. But there's a lot of health tech to big role for retail in everything. Believe it or not, like we've even developed a clothing line in this entire pandemic, and there's so much of innovation in just clothing and just fabric. It's not funny.
Excellent. Rajneesh, do you want to take a question on that? What do you see?
Yes, I think digital therapeutics, electroceuticals is a big thing, which I think startups should look at. VR, AR, of course, will have a deep impact on healthcare. Wearables, you have Goki here, so wearables will definitely be having an impact. So I think these are the areas where there is a huge opportunity for startups, and it's a multi-billion-dollar opportunity, so to say.
Excellent. Okay, the next question I have is again for you, Rajneesh, actually, which is how do you see technology helping reach out rural areas for treatment? And I think, Karan, you can also help us in the tech part of it over there. How much of rural tech do you see taking place? Do you really see telemedicine bringing scale to the rural population of India?
So I think, as I said, technology is a great leveler. And, our motto is to democratize super specialty healthcare. So we are taking domains where you don't even have, a few hundred doctors in that domain, specific domain, and bringing it all across India initially, and then all across the globe. So this can only be possible by technology. Just to give an example, we have 73 million diabetic patients in India, and to treat them, we have just 800 endocrinologists, and 600 of them are in 8 cities. So that leaves 200 for the whole of India except these 8 cities. And because of that, because they are not getting treated by the experts, we have 100,000 leg amputations a year because of diabetes, 150,000 people going blind, and so on. So I can keep giving the data. Now this can only be solved, and we are only producing 78 new endocrinologists in a year. By US standards, we need 30,000, we have 800. There is no way this gap can be bridged except with technology. So basically, a platform like ours is a force multiplier, and a doctor using algorithms and machine learning and others can basically treat hundreds of times more number of patients than they would be able to do physically. So I think it is not that whether it will help rural India. This is technology is the only way to solve the huge problems that we have in the healthcare, and to do it very easily in a very cost-effective manner, and eventually to bring down the cost of providing these super specialty healthcare, the differential cost to zero. Correct. So it's not about the technology is not there to increase the cost. The technology is there to dramatically reduce the cost. And as Sam said, the development of the technology and great technologies has become so inexpensive that it's not funny. That's what Cham said, and I would agree to that.
So Karan, what's your take on rural tech penetration? Where do you see that at today?
It's a bit of a tough one, and I think it might need a better brain than mine to, really provide you any insights. But it is definitely a challenge today, right? Um, you know, the Prime Minister Modi's vision of a digital India is not, is far away from being a reality as of today. There's a lot of states, and I'm not even just talking about, like Jammu and Kashmir, which has its own challenges, right, in terms of infrastructure because of the topography. But I'm talking about like states within the hinterland of the country, Madhya Pradesh, Uttar Pradesh, West Bengal, where, if I'm not mistaken, internet penetration is somewhere in the ballpark of about 20 or 25%, which for some of India's largest states is pretty poor. But I think what we're going to see over the next couple of years is, with the advent of 5G, is that will start to change significantly. The sheer volume of data that you're going to be able to carry, on 5G as compared to its predecessor, which is what we're currently using, it's an order of magnitude. It's a game changer with new technologies like millimeter wave, all of that. It's really going to happen. It's also a little bit of a chicken and an egg situation. As more things get digitized, whether it's EduTech, whether it's healthcare, or, all of these things, you're going to have to deliver that last mile connectivity to the audience. You cannot have, a large part of the country almost dark, as it were, when it comes to digital infrastructure. It will happen. 5G, I imagine, is going to be a large contributor to the cause. But it's definitely something that has to be addressed soon.
I'm sure folks like you guys will kind of build the infrastructure for that.
So we do. NetMagic is, a Class A and a Class B ISP as well. So providing that connectivity is a large part of what we do, but we don't play in the retail space, right? And a large part of what you're referring to when it comes to, spheres like education, healthcare, is providing that last mile retail connectivity to the end user, to his device, to his laptop. Unfortunately, that's not a space where we play in, but we've made great strides as an organization bringing that last mile to a client organization in the B2B space. And that's obviously, we've made significant inroads and improvements over there, as have other players, but the B2C part needs to be looked at as well.
Okay, thanks. So Aditya, a question to you. Do you see the scope for on-demand warehousing? This is from one of the founders, Nisarg.
Yeah, I think warehousing is one of those sort of pieces of the logistics, supply chain, which has not really been impacted too much by startups yet, right? There are a few that have come in, but nothing. I think some logistics companies like Delivery, Ecom Express, they're trying to sort of offer a fractionalized logistics warehousing, for their clients. It's not taken off in a big way yet. I think with the GST, with sort of, some of the, barriers for interstate travel sort of breaking down, and, with companies not now being forced to house inventory, in a particular state due to tax reasons, etc. Driven by some of those macro factors, I do think, some of this is going to improve. Also, I think I think a lot of the B2C consumer tech wave over the last decade has meant that, companies like ITC, Marico, Samsung, all these guys who, traditionally went in, to the distributor warehouse, distributor retailer sort of model, had super stockist. I think some of those supply chains are changing, right? So I think with the change of those supply chains, one of our portfolio companies, in fact, does sort of not an on-demand, but they've given out a small part of their warehouse, to ITC, for direct-to-home delivery of some of the ITC products. So as some of these things become the norm, I do believe some of these costs, like warehousing, will be variabilized, and people will look at interesting partners, for sort of affecting this sort of the new B2C supply chain. So yeah, I think it's going to be interesting. I think so. A few logistics players are well primed to sort of take that spot, but it needs to be seen. What are the challenges? Whether this requires special attention, etc.
Okay, the next question is more specific to Eight Road Ventures, Aditya. And the question is there a minimum threshold level that you look at for your investments?
Yeah, I mentioned this earlier. I think we are reasonably flexible. I think as long as we've gone from all the way. What we don't do is we don't do $500,000 million or $200,000 sort of seed checks. We don't play in that. I think we sort of invest once there's a product market fit. Once the company has a bunch of customers looking for growth capital to sort of scale up. I think that's the best time for us. However, there have been exceptions on both sides. On the late side, we've come in really late. And on the early side, there are actually a couple of examples where we've seeded companies, but those have been, where we built conviction on the space. We knew the entrepreneurs really well. We gave them, a few $1 million to start the business along with some of their capital. I think some of those we've done, but our norm is, where the product market fit is spoken for a little bit. It has X number of customers. The unit economics are broadly working, and the company is looking to sort of raise growth capital. I think that's the best time for us to sort of put in our anywhere between 8 to 20 million. That's 80% of our deals.
Okay.
The 10% extremes are when we either seed a company or do really late stage because for whatever reason we miss the bus in that sector.
And again, one more question for you is what's your take on B2B online learning, non-school market for corporate employment and training?
Yeah, I think big believers. Some of the things mentioned. I think Karan referred to the pace of technology change. I think all of these are driving. Obviously Shantanu is building a company. In a similar space. I think big believer here. Truly believe education is going to be continuous. I think people are going to reskill themselves more times. So I think this is what I like to say. Instead of spending $200,000 for a master's education one time, people will spend $20,000 4 or 5 times over a 20-year career. I truly believe that, and obviously companies, both B2C, B2B alike are well primed to sort of take that. I think the B2B companies, which is a specific question, will have to figure out a way to work with multiple technologies, multiple courses. How do they sort of control their experience? Because the biggest thing I've seen why this does not work or scale is because the completion rates are really bad. And just providing a B2B platform, the completion rates, I don't know how they're going to pan out, but yeah, I think as a macro trend, big believer. I think I truly believe technology and platforms like this have a really bright future.
Okay. Thanks a lot, folks. So I would like to now invite Mr. Ananya Das. So please hold on, the panelists. I've got a few more questions, but I'd like to bring in Ananya first. He would like to make an announcement of the goodie bags that all startups are going to get here. So he is the AVP of Product Engineering and Innovation at Entity NetMagic. So Ananya, are you there?
Yeah.
Okay, Ananya, over to you. What are you going to... So Christmas has come a little early for all of us. So what is Santa, Mr. Das, bringing us?
Are you going to put up the slide?
Yeah, sure.
Yeah, okay. Yeah, we have quite the package for this season.
Mm-hmm.
Unfortunately, Naveen, I'm not on a system which has video, so I can't do video, unfortunately.
Most Santas are always invisible, Ananya. That's okay. We understand.
Right. Yeah, we are going to give away a lot of stuff for all our startup friends to get up and running. We are going to start with our cloud offering, 50,000 rupees worth of free credit, where anybody can put up basically any kind of workload and see how it runs. On top of that, we are offering a pretty decent amount of security because, as you know, in the last 10 months. If after COVID, IT security is the next big headline grabber, Yeah, so with people working, from home, and the home networks may not be as fortified as corporate networks are. So we're doing both ends. Actually, we're doing a security audit for your infrastructure, as well as we're doing, we're giving an EDR, which is the endpoint, let's say, inspection, if you will, where people we can use the service to make sure that their employees, contractors, whoever maybe are, their endpoints are properly, tied down. We are also giving away a proof of concept for a DR for 1 month for 5 different workloads. You can, DR is pretty, everybody knows what DR is. It's basically what we've been going through over the last 10 months, disaster and recovery, basically, so that, you can do some kind of, and all of these services, will be run by the specialists at Entity NetMagic. So we will be helping you set up all of these, whichever or whatever you may choose. For multi-cloud, we are, as Karan mentioned, I think about half an hour ago. I mean, all of us want to get on the cloud, what have you, AWS or Google or Azure, but very few, I would say, startups necessarily have the technical depth to really make good use of the platforms. So we are giving away cloud platform management as well, a whopping 1 lakh rupees worth of free credit across platforms, if you will, any platform, if you will, doesn't really matter. And at the top of that, one thing which has been always a real surprise for many startups over the last 15 years I've been with NetMagic, and we've been seeing this again and again, is people want to get on the cloud, and then they'll get the bill and they don't like it.
True, very true.
It's always, it's like, Santa Claus just puts up the ice cream and then suddenly you have the girth around your stomach. That's something that we don't like. So yeah, we are doing that as well. We're giving away 1 lakh worth rupees of cost optimization on the cloud, where our experts actually look through your infrastructure that you may have deployed, and advise you over the last 20 years of us doing, not 20 years, 12, 15 years of us doing cloud and all kinds of workloads that we have managed across almost the entire industry spectrum. We will help you with that as well. So basically, in a nutshell, we are giving you stuff to run your application, secure your application, protect it in case something goes wrong. We are also helping you manage and optimize it. So it's a pretty rounded offering, in my opinion.
Thanks a lot, Ananya. And how do startups avail of these benefits, Ananya?
They can get in touch with us, and I guess our marketing folks are available. I think they can all. There is a link as well. I think Trupti has it up on the chat. Just go up there, click on it, give in your details, and that should be it, I guess.
Perfect. Thanks a lot. And startups, please do make use of this. Thanks, Ananya, for that.
Thank you.
And back to the panelists now. So folks, I think we've almost run out of time. So I'm going to ask you all for your closing remarks. What do you think the next 24 months and scaling up looks like? And if you were to advise startups, early stage startups, what would those top 2 or 3 things be for them? And I would like to start off with Karan. What's your advice on tech and stuff? Next 24 months, what's your advice to startups?
Sorry, was temporarily muted. I was going to take the easy way out, wait for Shantanu, Rajneesh, and Champ to give their inputs, and then agree with everything they said. I think the important thing is, what I talked about earlier. Define an IT strategy that will help you scale. It has to be modular, it has to be flexible, it has to be agile. If your IT strategy is going to involve the cloud in a very, very large way, or leverage the cloud, and let's be honest, it almost certainly is, seriously look at a hybrid cloud strategy to be able to deliver the best ROI, agility, and flexibility to you. It will allow you to be able to, cater to a wide range of business requirements that you have, and allow you to be able to make changes as well. But I think if we were to even go one step back, is define an IT strategy that addresses your outcomes, right? The defining your outcomes when you're defining your IT strategy is key. So your outcomes should be modernization, optimization, making sure that you're connected, making sure that you're secured, making sure that your IT landscape or your environment is completely under your control. All of these things. So define your outcomes. Choose an IT strategy that will allow you to be modular, flexible, and agile. Don't put all your eggs in one basket. Seriously look at a hybrid cloud as the IT strategy of choice for your organization. That's from a tech perspective. From a business perspective, of course, I'd let Shantanu, Rajneesh, and Champ provide their inputs.
Sure. So, Shantanu, over to you.
Yeah. So Naveen, as I started off with that, in my mind, entrepreneurship is the art of staying alive long enough to get lucky. And as entrepreneurs, you'll realize that you will need more time than you actually thought to make your business successful. And to have more time in your hand, you need more capital, right? So it's important to ensure that you're being frugal about capital, right? It's not being conjuice. It's not about not spending money, but do not need to waste money. It's important to remain consistently warm rather than running hot and cold. Yeah, so that's one thing which is important for entrepreneurs. And I also think that fundamentally, it's important for entrepreneurs to have a long view of stuff, right? So we need to realize that a 10-year plan is not the same as 10 one-year plans, right? So it's
very well said. Very well said, in fact, yeah.
And as Champ rightly started off, saying that goal is supreme. From goal comes my strategy. From the strategy comes my structure. From the structure comes my team. You can't form a team and a structure and then say, let me set my strategy and my goal. It doesn't work. So it's to be downstream from the goal. Then you form your strategy, structure, team, the performance management, ops, and all of this. I think that's important for all of us to remain alive long enough to get lucky.
Perfect. Rajneesh, over to you.
Yeah, so I think scaling up is all about mindset. And I like the quote of a storyteller who was the head of moonshots at Google X, that it is easier to make something 10x better than 10% better. To give you an example, there are, in the first domain that we're building, there are 4 US and European companies who manufacture the equipment that we manufacture in the diagnostic space. And it is very difficult to be 10x better than 10% better than them, because they have global distribution network, they have huge cash flows, they have established brands. One can only compete with them by changing the rules of the game. So exponential growth comes from innovative business models. So instead of trying to compete with them by selling equipment at a cheaper price, we change the business model to an asset-light model, a clinic and clinic revenue share model, and we have expanded the market 10x. And we have just started, but today it is 10x of what it was when we were not there and the MNCs were there. So I think, thinking about being 10x better than the present system of how the things work, rather than being 10% better, I think this is one very important tip. And if I can take one more minute, one very other important thing that I believe in. So, as tech entrepreneurs, most of us are very passionate about the technology that we are building. And because of that, sometimes we started working on frivolous problems to apply that technology. So, at NeuroEquilibrium, we are not focused on a technology. It's not about technology, but we are passionate about the solution that we are building. And we have honed up the capability to develop and integrate various technologies, relevant technologies, to provide a disruptive solution. So, as I always think that, and my advice to startups is that founders of startups should not be stuck at a technology. And technology innovation is not as important as business model innovation and innovation in customer acquisition. And I think this is the key to growing successful, scalable organizations. Thank you.
On those notes, Champ, What are your advice?
So, the fun of being a startup, it's always like the ship of Theseus.
True.
Uh, so whether it's a lockdown, whether you're in the best of times, whatever it is, there are always things to fix while you're sailing, and there's always things that are failing, and there are always things that you got to keep yourself afloat with. So I think my advice to everybody is, while you're doing that, right, you need to understand whatever you do, what is the impact it's going to have? Because, if you're building a tech product, if you're building a hardware product, whatever you're building today, everything has to have an impact. And, often I feel people actually get lost in saying, I'm going to build an amazing integration for operations, and that's how I'm going to serve my customers. But they forget that, at this time, maybe building a better marketing plan is more useful for you than building that operation bit. So you need to actually think with a very clear mind, get a mentor who can help you do that. Get a bunch of mentors if you need to. Take advice from people and think of what you need to build, what's going to have maximum impact on your vision and the product that on your objective overall. And then work backwards and say, this is my priority to be built first. This is my priority to be built second. And these are the things on the side that I may need to build, and work just based on that. Don't waste your time elsewhere, and be frugal. If it fails, it fails. Just quickly move on to the next step.
Thanks, Champ. And on that note, to the investor in the house, Aditya.
Yeah, I think a lot of what I wanted to actually say, was well summarized by both Shantanu and Champ. I think one is obviously, be bold. I would say have a big vision. I think that's what that's how you remember why you started the company. Always back yourself, in times of duress. No one will believe in your vision if you don't have one, and two, if you don't passionately believe in it yourself. So just make sure you sort of stay true to what you started with. Obviously, you need to be flexible, but in terms of pivoting, etc. But just have a vision of what you're trying to achieve. I think second is just raise capital, when you can, not excess capital, not too little, but when it's available. I think it's always smart to raise capital. In the process, select good partners, who can back your vision, who see your vision and can back it, and who can stand behind you in tough times. And third is, I think what Shantanu said, I think spend capital wisely, do a lot of A/B testing on what is working, what is not, before going down one particular route, in a big way. So I would say constantly experiment, and once you sort of figure out that model, that what is working, just double down big time there. So I think these three would be something which I believe.
Okay, thank you very much. On that note, I think we're perfectly on time. So I'd like to thank all my panelists for this lovely session, wonderful session. There's been a lot of learning. And if I have to ask Aditya, if people want to kind of talk to you or send you their decks, is there a email address, or is there something that they could kind of write to you on?
Yeah, I think LinkedIn, I'm pretty accessible on LinkedIn. I think LinkedIn's good. Yeah. Or my email is my first name dot last name @8roads.com. That's pretty simple.
Perfect.
So both are perfectly fine.
Thanks a ton. And folks, thank you all for being here today. And for all the founders also, thanks a ton. Please remember that all of these people, 5 on the panelists plus NTT, they're always available to you. Just send us your questions if we have not been able to answer anything in specific. I've seen some questions with respect to, partnership with, with Champ and Goki. And I've seen some questions with how does NTT specifically help startups grow? So all those kind of things I thought were a little more deep dive rather than a panel kind of a discussion. So write to us, we will direct it to the right people. And on that note, thanks a ton. Happy Christmas, Happy New Year. And especially for all the founders, thank you for staying with us over the last 9-10 months. It's been a rough ride, but also we have come doing pretty well with that. TiE Mumbai per se has gone completely digital. And as an announcement to make, it so happens that at the end of Jan or the first week of February, we will be doing a global healthcare summit. Watch out for that. It'll be interesting. In fact, 8 Roads is also already happy to be kind of helping us on that, and so does Rajneesh. So it'll either be during the last week of Jan or first week of Feb. And on the goodie bags, it seems there is a time limit to the goodie bags. So you guys will have to quickly write on that to NTT and get your goodie bags availed. I think there's just about a week from today that you have to write and enroll yourself for that and the services. So please do that. And folks, thank you all. This has been a great show. And thank you for your time.
Thanks for
And
having us.
Thank you, Naveen.